a current chart from Gold Charts R Us and ask yourself, why the hell would 8 Western banks be stepping on the price of silver to this degree, concentrated to the degree of more than any commodity ever traded in the history of the Comex market? 8 banks in silver. And this is what is happening as a result of it. Here's the LBMA. They have 800 million ounces, right? 800 million ounces of which 500 belong to the ETF. So they have 300 million ounces. They admit to trading 292 million ounces a day, which is 10 times understated by their own admission. 2.9 billion, they're trading 10 times the float. Now here's the crazy thing. In the month of August, 8.1% of that float, 25 million ounces, were delivered off of the LBMA. How many more months can we see massive deliveries? I'll stop sharing, but what I want to get across in all of this, Mario, in my opinion, is that why the hell would 8 Western banks be stepping on the price of silver to that degree? Because they need it to make weapons. And this military-industrial complex is a whole hell of a lot more powerful and probably running the country to a greater degree than is our current president. And they're the ones pulling the strings. So if you allow 8 banks to suppress the price in order to make weapons, well, that's a problem, but it never was a problem. Why wasn't it a problem? Because if you go back throughout my whole career since 1989, none of these entities across the globe ever stood for delivery. On Comex, it represented 1% or less of contracts, and on the LBMA, it really never happened. It is something you can do, but these countries, 140-year-old LBMA and the Comex since 74, most of these countries, the entire lifespan of both of these exchanges have been third world nearly. They haven't been sophisticated, coordinated, and motivated enough to stand for delivery, but they are beating us at our own game. They're beating us because they understand the significance of silver, that it should not be industrial, it should be strategic. You have a big movement in Canada trying to move it to that classification as strategic. You need it in so many of these applications. Why would 8 banks be stupid as a mud wall in a rainstorm trying to hold down the price when countries like China are going all around the world buying concentrate and doré, when India is buying 800 million ounces over the last 2 years? These are really important things to consider. And I think what you're witnessing right now here is these countries are wise to what the West is doing. It's similar to the new foundation of the BRICS grain exchange. In it, the gentleman who's running it said, look, we produce and consume more wheat than the West does, yet we don't have a chance to have any say in the pricing of it. That's done on Comex. But with the development of this new exchange, that will change. They know what we're doing on all of the world's commodities, and they're beating us at our own game because of the ability to stand for delivery. They're standing for delivery, where 8.1% of the entire float in London is delivered in the month of August. They are basically saying, we'll beat you at your own game without firing missiles. We'll just stand for delivery. So I would simply say silver is the best investment opportunity I've ever seen in 34 and a half years of business. I don't think we've seen anything yet. If we can get above 32.50 and close, there's very little resistance between it and 50. And if you realize, to your point, that it's 6 times undervalued historically, well, that only puts it, I believe, at about a 16-to-1 ratio. I think, is that what you're talking about? You could argue that it's 11 or 12 times undervalued if you believe Keith Neumeyer telling us it's coming out of the ground at 7-to-1. Any way you look at it, you have an asset that is massively undervalued historically and geologically, that is seeing a massive expansion in uses in green and digital, ignoring the fact that military uses have a significant implication and are not recorded or reported. And yet you have stupidity of 8 banks trying to suppress its price when very sophisticated central banks are saying, thank you very much, we'll stand for delivery. So I don't think I've ever seen a better place. Decreasing supply above ground and below, increasing demand, and an artificial price that is distorting its historical and geological price ratio. I don't know if there's a better investment on the planet, and I mean that as God is my witness.
If you think this is just about precious metals, you're in for a surprise. It's about global power dynamics, strategic resources, and the very lifeline of modern industry and defense. What we're witnessing here is a deliberate attempt to keep the price of silver artificially low, and that's not because the banks are clueless. It's because they have an agenda, and it's one driven by necessity rather than economics. You might be wondering, Why would anyone want to suppress the price of silver? The simple answer lies in its strategic value. Silver is not just a shiny metal used for making jewelry. It's critical for high-tech applications, including military weaponry, electronics, and renewable energy. In other words, silver isn't just industrial, it's strategic. And this makes it the key to so many sectors of the economy and defense. Let's start with this. 8 Western banks have been stepping on the price of silver to a degree that no other commodity has ever experienced in the history of the Comex market. And that raises a big question. Why? Are they trying to manipulate the market for profit, or is something bigger at play here? If you look at the LBMA, London Bullion Market Association, they claim to have around 800 million ounces of silver in reserve. Of that, 500 million ounces are allocated to ETFs. That leaves them with only 300 million ounces. Now here's where it gets interesting. They admit that they trade 292 million ounces per day, and that's their conservative estimate. By their own admission, those numbers are likely understated by a factor of 10, meaning that they are trading 2.9 billion ounces of silver per day, more than 10 times the amount they actually hold. In the month of August, 8.1% of that available float, 25 million ounces, was delivered off of the LBMA. Think about that for a second. That's almost 10% of the entire available supply in just 1 month. How many more months can we continue to see these massive deliveries before the whole system starts to crack? So why are these banks so focused on keeping the price of silver down? Because they need it. Silver is vital to the military-industrial complex, and that complex is more powerful than most people realize. In fact, I'd argue it's more powerful than the president himself, and it's pulling the strings behind the scenes. Let's not forget, the military is a major consumer of silver. It's in missiles, stealth fighters, and almost every form of advanced guided weaponry. A man who works with the Department of Defense once validated for me just how much silver is used in a Tomahawk missile. He told me there are 13 to 14 kilograms in the tip of every missile. That's about 450 ounces per missile. Now imagine the scale of silver needed to produce these sophisticated weapons. If you go back in history, there's a fascinating reference from October 14th, 1942, when a bill was passed to authorize the use of silver for war purposes. At that time, the consumption of silver for military applications was running at 100 million ounces a year and growing. And today, with the complexity of modern warfare, I wouldn't be surprised if the military's silver requirements are exponentially higher. And yet, when you look at the Silver Institute's report, where they list all the uses of silver, industrial, photovoltaic, solar panels, jewelry, electronics, you'll notice something peculiar. Military usage isn't listed. The truth is, much of the military use of silver is classified, and it's not included in the official demand numbers. The military's need for silver is a hidden demand that continues to drive real-world usage far beyond what the official statistics reveal. Now here's the kicker. The rest of the world has wised up to what the West is doing. They've figured out that the best way to counteract Western influence isn't by firing missiles. It's by standing for delivery on commodities like silver. We're seeing countries like China and India accumulate silver in massive amounts, and they're doing it quietly without drawing too much attention. Take India, for example. In just the first 6 months of 2024, India imported 5,554 tons of silver, a 7-fold increase over the previous year. Meanwhile, China is flying around the world, buying up silver concentrate and DOR, unrefined silver, directly from miners in Latin America and shipping it back to China to be refined. This silver is effectively taken off the global market in a very opaque manner, bypassing the traditional exchanges like the LBMA and COMEX.
Look, you see India's imports increased from 560 tons last year in the first 6 months, which was a massive year for them, up to 4,554 tons so far in 2024 in the first 6 months. That's a 7-fold increase over last year. You see China flying around, as I mentioned, buying up all the concentrate and the doré in unrefined fashion from the Latin American miners and sending it back to China to have it refined and taken off of the marketplace in a very opaque way. You're seeing metal on the London Metals Exchange trading right now. They admit to trading 290 million ounces a day, but admit that on the LBMA that those numbers are 10 times understated, which means they're trading as much as 2.9 billion ounces of silver per day, or 3.5 times annual global mine supply. This is quite an effort to keep the price held down. At the same time, the biggest money in the world is going all around the globe, buying all that they can, importing all that they can. And I find it interesting that, we're going to have another structural deficit over 200 million ounces between supply and demand, mine supply and demand. And, again, you're talking about not a peep. Yeah, there isn't a peep, but can I share my screen with you by chance? I want to show you something.
Sure. Hold on a second. Let me,
I want to show you something that I think is one of the reasons why we are seeing what we are with silver. My buddy John Little is a heck of a researcher, and I owe a lot of this information to him. But take a look here. This was, if you Google this, you'll see S.2768, October 14th, 1942. A bill to authorize the use for war purposes of silver held or owned by the United States. And just this first paragraph: the present consumption of silver for war purposes is at the rate of about 100 million ounces a year and is growing rapidly. According to the War Production Board, it is only a matter of months before war demands will increase sufficiently to require at least 200 million ounces of silver per year. A presentation 2 years ago at Jay Martin's Vancouver Resource Investment Conference, where I said there's roughly 500 ounces in the tip of a Tomahawk cruise missile of silver. And a man came up to me after the presentation. He says, I work for the Department of Defense. He says, I helped design the Patriot missile and the Tomahawk. He says, I think there is silver in it. I just don't know how much. I'll get back to you. Great. Never heard from him again. I go back this year in January, earlier this year, and I gave a different speech, and there he was with a bunch of pictures in his hand. Said, listen, this is all declassified. Don't worry. He was showing me how they had a challenge of shooting the Tomahawk vertically. It was originally designed to come out of a torpedo tube and all sorts of stuff. He says, you know what? You're right. There's between 13 and 14 kilograms in the tip of a Tomahawk. And I'm like, oh, okay, well, that's cool. I'm glad it was validated. And in all of this high-tech weaponry and aerospace, stealth fighters, and all of the missiles that are used that have guidance systems in them, silver is needed. And so this is 1942. They say we need up to 200 million ounces. Well, look at this. This is the numbers out of the Silver Institute. Here are the demand numbers. Here's the 265 million shortfall, and here are the demand numbers. Industrial, 9%. Electrical and electronics, 9%, of which photovoltaics, that's solar panels, 20%. Brazing, alloy, and solders, 3%. Other industrial, 9%. Photography, -3%. Jewelry, 4%. Silverware, 7%. Well, where the hell is military? Now,
as we shift our focus to the future of silver, it's crucial to emphasize the forces that are working behind the scenes to suppress this precious metal's value. The global financial and political landscapes are playing key roles in this silver story, and it's becoming increasingly evident that a massive change is coming. Whether it's the looming structural deficits, geopolitical shifts, or the growing demand for industrial applications, silver is on the verge of a significant breakout. Let's break down the primary factors that will drive silver higher in the near future. 1. The role of central banks and the shift in global power. The first key factor in the silver equation is the role of central banks and the geopolitical power shifts that are currently unfolding. Central banks, particularly those in China, India, and other parts of the BRICS coalition, are quietly accumulating silver and gold. These countries have recognized that the West's monetary policies, especially those tied to the US dollar, are unsustainable in the long term. As a result, they are diversifying their reserves away from the dollar and into hard assets like silver and gold. What makes silver particularly interesting in this context is its dual nature. Silver is both an industrial metal and a monetary metal. As central banks continue to acquire precious metals, they are preparing for a world where the dollar's dominance is significantly reduced. Silver, being much cheaper than gold, presents an attractive opportunity for countries looking to accumulate large quantities of wealth protection without drawing too much attention. The BRICS nations in particular are expected to play a significant role in reshaping the global monetary system. If they decide to introduce a new currency that is backed by commodities, including silver and gold, we could witness a radical revaluation of silver prices. The recent discussions within BRICS about commodity-backed currencies suggest that such a system is not only possible, but imminent. If silver becomes a key component of this new monetary system, its price could skyrocket as global demand surges. Second, industrial demand, the green energy revolution. Silver's role in the industrial sector is often underappreciated, but it is one of the most important factors driving demand. Silver is a crucial component in solar panels, electric vehicles, batteries, and 5G technology. The green energy revolution is fully underway, with governments around the world committing to massive investments in renewable energy. Silver plays a vital role in this transition, particularly in the production of photovoltaic PV cells for solar panels. According to the Silver Institute, silver demand in the solar sector is expected to grow by 20% annually. This growing demand is part of a broader trend where silver is becoming an indispensable component of clean energy technologies. The global push to combat climate change and reduce carbon emissions means that silver's industrial applications will only increase in the coming years. In addition to solar panels, silver is also critical in the production of electric vehicles, EVs. As more countries move toward phasing out internal combustion engines in favor of EVs, the demand for silver will continue to rise. Electric vehicles use significantly more silver than traditional gasoline-powered cars due to the advanced electronics required for their operation. But it's not just the green energy sector that's driving demand for silver. 5G technology, medical equipment, and advanced electronics all require silver. In fact, silver's unique conductive properties make it indispensable in a wide range of high-tech applications. As the world becomes more interconnected and technology-dependent, silver's industrial demand is set to grow exponentially. 3. The military-industrial complex and the strategic importance of silver. We've already touched on the military's need for silver in high-tech weaponry, but let's dive a little deeper into why this matters. Silver is a key component in the missiles, fighter jets, and guidance systems that form the backbone of modern military capabilities. As global tensions rise, particularly with the ongoing conflicts and geopolitical power shifts, the demand for military hardware is increasing. This means that the military-industrial complex will require even more silver in the coming years. One of the most fascinating aspects of silver's military application is its use in missile technology. As mentioned earlier, there are roughly 500 ounces of silver in the tip of a Tomahawk cruise missile. These missiles are not just a small part of a country's arsenal, they are a key component of modern warfare. In the United States alone, thousands of these missiles are produced and maintained, each requiring significant amounts of silver. The silver deficit, a supply crisis in the making. Another major factor that will drive silver prices higher is the looming silver deficit. In 2024, the global silver market is expected to face a deficit of over 200 million ounces. This means that demand for silver will outstrip supply by a significant margin, leading to a situation where there simply isn't enough silver to go around. Several factors are contributing to this supply crisis. First, global silver production has been declining in recent years. Many of the world's major silver mines are aging, and new discoveries are becoming increasingly rare. At the same time, recycling efforts have not been able to keep pace with demand, leading to a tightening of available supply. But perhaps the most significant factor is the growing demand from investment in industrial sectors. As we've discussed, the green energy revolution, the military-industrial complex, and the broader technological advancements are all driving up demand for silver. Meanwhile, investors are also recognizing silver's potential as a store of value, particularly in times of economic uncertainty. This combination of declining supply and increasing demand is a recipe for a massive price spike. The silver market is incredibly tight, and it won't take much to tip the scales in favor of a significant price increase. 5. The shift in public perception, a new awareness of silver's value. One of the most exciting aspects of the silver market is the growing awareness among investors and the general public about silver's value. For years, silver was viewed as gold's little brother, valuable, but not nearly as important. However, that perception is changing. As more people wake up to the reality of silver's industrial applications, geopolitical importance, and investment potential, we are seeing a shift in public perception. This shift is critical because it will drive a new wave of investment into silver, further pushing up prices. It's not just institutional investors that are getting in on the action. Retail investors are also starting to recognize the opportunity that silver presents. In recent years, we've seen a surge in interest in silver coins, bars, and ETFs. This growing demand from individual investors is adding even more pressure to an already tight market. 6. The role of speculators and the potential for a price explosion. Finally, we have to talk about the role of speculators in the silver market. Speculators have the ability to drive prices higher at a rapid pace, especially in a market as tight as silver. When silver starts to break out of its current trading range, we could see a massive influx of speculative money, leading to a parabolic move in the price. The key level to watch is $32.50. If silver can break through this resistance level, there's very little stopping it from moving toward $50 per ounce. Once that happens, the momentum could carry silver much higher, especially if speculators start piling in. In conclusion, the silver market is primed for a significant breakout. Whether it's the growing demand from industrial sectors, the looming silver deficit, the role of the military-industrial complex, or the shifting public perception, all the signs point to higher silver prices in the near future. For investors, this is a once-in-a-lifetime opportunity to get in on the ground floor of a metal that is poised for massive gains. As we move forward, keep an eye on key resistance levels and the broader geopolitical landscape, because when silver moves, it's going to move fast. Get ready because silver's moment is coming, and when it does, it will be one of the most exciting markets to watch in the coming years.